Good evening, everyone. Quick market review on what has transpired this week on major asset classes: Nasdaq, Gold, Euro, USD, USD CAD, and BTC. I know you might be wondering why I have these pairs here. They are simply much used as benchmark to know what my preferred asset class would be doing. So for the Nasdaq, um, price has just recently broken out from all-time highs. We've had all-time highs around this level. So when price broke past this level, it continued trending higher without any real retracement. Seasonal tendencies for the Nasdaq remains bearish this month, and no real indication of a breakdown in price yet. I'll be expecting a break of the 28666.5 level to confirm that sellers are now involved in this market, and we might be seeing further price push to the downside. The XPX, just a measuring stick, pretty much same thing. Nothing serious happening on this chart. And the US 30 we've consolidated. That gives me like an idea that they might be gathering in orders around this level. So you have to be really careful of what you are doing in this market. I don't know where the directional breakout may be. It might be on buy side or sell side. I'm not holding a hard opinion on any of these markets yet. For gold, we've consolidated all week. After this push to the downside, and taking out this low, we've just seen it stay inside the range. No real breakout. I'm avoiding this market for now. I'm doing nothing until next week. For the Euro USD, this has been a wonderful pair, and respected all our calls this week. For those who follow my post on X, they have experienced me call this drop. This pump around here to the 1.16555 level, and the drop to the 16012, and calling another drop today to 1.15885. GBP USD, I don't usually trade this pair, so I'm not trying to hold a hard opinion on what it's going to do. But come to my head, I would favor the 1.33013 as a likely draw on liquidity. The USD card, that's what I'm interested in for tomorrow, and it's the reason for this whole video, so pay attention. The 1.1373325 level has recently been swept, and that is the low of the last 2 days. Remember, there is a 3 days banking cycle usually happens in the market. I don't have a clue why it happens, but I know it happens, and you can backtest this on any asset class. The DXY, we've recently seen price responding from the 98.976, and that is a breaker. Low, low here, low here, a break of this high, a break of this high, and this is the first bullish candle that comes in around that level. We've already used it on, I think, on Monday, but I'm still incorporating it in my analysis. The low of the last 3 days of the last 2 days have not been swept, and you see that of the USD card it's been swept, and we are trying to have a close above that level. US oil, you have to understand that Canada is a major exporter of oil, and it will influence how the USD card will behave. And many will say, if Canada is an exporter of the US oil of oil, why are we not having a push to the downside? Oil prices, oil is being sold in USD. That's why you see the US oil. If not, it should be the oil. It's being sold in dollar, so it will have a direct relationship on how the USD behaves. Oil, if you trade oil, I don't trade this asset class, but we should be seeing a rally to the 1052 5.8 level. We should be seeing a rally to those highs around there, and if you look closely, you see equal highs around that level. SMT on the lows, DXY, SMT around the lows here. Also SMT with USD card, SMT here, failure swing, and DXY, SMT here. The bond markets, the biggest global market in the whole world. You have to understand the bond market because it usually moves all asset classes. Any trader who has been trading for a long period of time will tell you this. I usually don't read fundamentals, and I'm not smart enough to decode what that data says, but I get insights from the bond market on what I should be expecting, and that is all I need. We might see bonds rally to the 48.352%, but I don't trade it, so I'm not trying to hold a hard opinion on where it should be going, but that is the likeliest draw on liquidity. A sweep of the 4.56% rally to 10-year treasury bond market, to the highs around there. failure swing. Looks like an equal low, but there's been no close below this low. So it's important to me. Equal lows around there, no close. You should be seeing a rally to that high. For USD card, where is that pair? You should be seeing buys to the 1.37941. So that might carry us into next week. So it's like a short-term trade, but let's see. For those who trade BTC has pretty much been in a consolidation, and I'm not interested in this market. For me, it's in a consolidation, but for others, they are seeing continuation. I'm not just interested in this market for now. And ETH, I see this as a consolidation. Monday comes in here, and we have pretty much been inside the range of this high and this low. So I know many people will be trying to guess where the next directional breakout is going to be. I'm not interested in doing that. And so yeah, that's it. You all have a wonderful day.